Today we saw selling with the VIX spiking and we're sitting at some very critical support levels. So first up, let's take a look at the Nasdaq 100 triple Qs. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we're starting on the triple Qs, and today we were down 2.37% and we did hit some very critical support. But first I want to have some fun and I want to go back to February 2nd when we were getting this breakout outside the upper Bollinger Band and we were having a very blow off top look in the triple Qs. And on that day in the Stocks Channel Discord, I did give multiple price predictions that came with prices and dates. And I'm throwing that up on the screen right now so you can take a look at it. And you can go back and check these dates and these prices and you could see we did get very close to these levels. But more importantly, we did hit the target one day early, which was that target at 294. And that is where we closed within pennies with today's price action. Now there's more on these predictions that I did cut off because this is for the Stocks Channel Discord. But I am telling you there are multiple ways you can predict where the stock market is going to go in the future as long as you understand how to follow price action. And that is exactly what I suggest you use to manage your risk from, because if you learn to follow price, you do not need anything else to be a successful trader. And that is what I am trying to show you with these predictions. They don't always play out to the penny or to the exact date, but if you learn how to trade price action and you have a good understanding of where price is going, you are going to do very well trading in this market. Alright, so now looking at the price action in the triple Qs today, we can see we did go down on decreasing volume after we did gap down in the morning. And last week, we did close above that rising 20 daily moving average of support at 300. But instantly this morning, we gapped down below it, which meant below 300, we were looking for the next price target lower at 294. So now sitting on top of 294, there are multiple directions we can go because we can bounce off 294 and come back to the breakdown below 300 and test that level as resistance, or we can continue climbing higher to close the gap at 303. So if you want to take a long trade, this is your risk level at 294. But even if you want to take a short trade, you can also use this as your risk level. So this is a very critical support in the triple Qs, because if we break it, we could come down here and close the gap at 288. So going into tomorrow, this is a very simple trade plan of whether or not we're above or below the risk level at 294. And below it, we're likely going down to close the gap at 288. And above it, we could go close the gap at 303. Obviously, you need to follow the price action to know which trade you need to take. Or if you're swing trading long positions, you still need to manage your risk around this support, because this is the critical double bottom breakout of the neckline, which is this level at 294. Now, another thing to pay attention to is we do have the 50 EMA and the 200 daily moving average sitting at the same exact price at 290. So there's going to be multiple traders also looking at that support zone around 290. So it is possible we go test that level as support as well. But no matter how you look at it, if you are a price action trader, you need to manage risk around closing prices above or below this risk level at 294. You can also tell by the price action we are in a short-term downtrend because we did break down to a lower low after a lower high. So anytime you're in a short-term downtrend, there's always the possibility it can turn into a longer-term downtrend and things could continue to spiral to the downside. So we did lose the support trend line on that close back here on February 16th. And now that we've lost the support trend line and we're now in a short-term downtrend, you can start to draw a downward channel and monitor price to the downside and wait until we get a bull breakout back over 306. So how you trade the market is completely up to you. Just make sure you're managing your risk on a price action breakdown below support or breakout above resistance. So no matter how you trade this market is completely up to you. Just make sure you're managing a risk from support and resistance levels and try not to do a lot of trading between support and resistance, because that's where you're going to get whipsawed. Sitting right on top of some critical support is a great time to start trading. That is exactly where we close with today's price action. So it should be a very good trading week coming off of this risk level. Whether we go higher or lower, you have very well defined risk and you know exactly the price action to pay attention to. Jumping over to the S&P 500 SPY ETF, we could see that we also did break down below support with the gap down open, because we did have this support zone right around 407 to 408 and we did gap down to about 403. So while SPY is below 407, there was a good chance we were coming down to 400 and we closed right on top of 399 today, which is also below the 50 EMA. So from here, the breakdown below 408 to 407 could bring us all the way back down to the 200 daily moving average, which is still sitting at 393. But as you can tell, the daily Bollinger Bands are not currently allowing price to go that much lower, so we will need to see the volatility expanding and allow those bands to open up. So on SPY, I would manage your risk right here around 400, and while we're below 400, there's a good chance we're going to 393, and if we break above 400, then we could start to bounce back up towards this gap fill at 408, which was the breakdown, which means we could retest that breakdown as support. So on SPY, watch the price action movement around this level at 400, which is also going to be your 50 EMA. Below that level, we're going to 393, and above that level, we're likely coming back down to retest the breakdown and fill that gap at 408. We're getting a lot more bullish if we break out of the downtrend, which is going to require a break back over SPY 411 to 414. And if you're extremely bearish on this market, you can stay short as long as SPY is below 414. But if we start to break above that, then we are very likely going into the 420s. In the Dow Jones, we were down 2.08% today, and the Dow Jones is breaking down below the bottom of this bull flag, which was that support zone right around 334. So below this, we could be revisiting the stronger support down here around 327 or the 200 daily moving average around 323. Now keep in mind the Dow Jones closed way outside the lower Bollinger Band. So in the short term, we may be due for a bounce back up to the breakdown zone of resistance around 334. So there's a very good chance we need to go higher before we go any lower. So do keep that in mind that we are getting overextended to the downside on the daily chart. Now, if we can break back over 334 and hold that level of support, we're looking for stronger resistance around 339, 343, and 346. And if we could break out of the bull flag above the 340s, then we're marching higher into the 350s. On the Russell 2000 IWM ETF, we were down 2.95%, and the Russell 2000 is starting to close down below the neckline breakout at 188, which means we're likely coming down for the next leg lower, which could be the 50 EMA at 186, the support at 185, or the gap fill just below 181. You can clearly see the Russell 2000 broke down to a lower low and lost support, so you cannot rule out the possibility that we are trying to go down to fill this gap just below 181, and that could happen very quickly because we are seeing an increase in volume on the small caps. So manage your risk in the small caps right here at this level at 188, and you can short from that level if you are expecting the gap fill. But if we break back over that level, you're looking for a retest of the resistance around 192 to the resistance trend line around 193. On the RK ETF, we were down 6.09% today, and we are seeing a major breakdown in support because we did see RK closing down below 40, and this is a very clear rejection from the support trendline breakdown and retest as resistance. So this is a short trade in the ARK ETF from that rejection that could take us all the way back down towards 35, but we will have support on the way there between 39 and 38. Upside resistance will be 40.4 and 41.66, so watch those resistance levels, but this is very clearly a strong rejection on high volume selling. On the VIX, we were up 7.72% as the VIX did bounce off of that support at 20, and we are seeing the VIX looking way too far overextended outside the upper Bollinger Band, and the VIX did gap up, which could be from the holiday close yesterday. But either way, this is an overextended VIX that is likely going to get crushed back down towards 21.3. However, that doesn't mean the VIX can't crush and then immediately start spiking higher yet again. So in the short term, even if we do get a VIX crush, as long as the VIX is above 20, we are still looking for a volatile pullback. And it's only once the VIX crushes all the way down below 20 that we're looking for a continuation of the bull trend. On Bitcoin, we're currently down about 2.3%, and Bitcoin is holding up fairly well, all things considered. It touched the top of the Bollinger Band today, and it pulled back down to the 5 EMA. And overall, Bitcoin is still in a bull trend as long as it's trading above 24,000. If Bitcoin gets a high volume rejection from this resistance, and we see a breakdown below the 20 simple moving average at 23,000, then we could come all the way back down towards the 200 moving average down here right around 19,750. But overall, Bitcoin is holding up very well, and this is an extremely risk on asset. So you have to ask yourself, why is Bitcoin not selling off with the rest of the market, or is it just lagging behind? On Amazon stock, we were down 2.7% today as Amazon did lose that critical support at 97, which means we could be well on our way to the next support lower, which is right here just below 94. Below 94, we have the gap fill at 90, so you can stay bearish in Amazon as long as it's below this resistance at 98. To get more bullish, we need to break above 98 and then get back over 102, but for the short term, it does look like we could be heading to lower prices. On Microsoft stock, we were down 2.09% today as Microsoft is testing 3 critical support levels, and they are all essentially in the same exact spot, which is the zone between 252 to 253. We have the bullish breakout of the bear market resistance trend line and a back test of that level as support. We're sitting on top of the 200 daily moving average and the critical support zone right at 252. So there is a very good chance Microsoft will try to find buyers at this level. and go fill 2 of the gaps above at 256 and just below 262. So look for strong support here at 252, and if we break that, we have the support trend line just a couple of dollars lower, right around 250. If we lose all of that support, then Microsoft will be looking bearish, and it will be looking like we could come back down towards 242. On Nvidia stock, we were down 3.43% today, as Nvidia did break down below that support at 213, and we did get a daily close below the rising 20 daily moving average. So below 213, there is the possibility we're coming back down towards 192. We're getting more bullish if we break back over 213, and we do have gaps to fill at 219 and 230. So you're only getting bullish if we can reclaim that support there at 213. On Tesla stock, we were down 5.25%, as Tesla is sitting right on top of that critical support zone between 196 and 197. And if we break that, we have the rising 20 daily moving average and support trend line just a few dollars lower at 187. So if Tesla does break down below the support at 196, we are likely going down towards 187. And then below 187, we have that critical support at 183. The upside resistance remains 205 and 207, and the previous daily high just below 215. On Apple stock, we were down 2.67% today, and Apple is starting to look like a double top rejection off of 156 as long as it's below this neckline breakdown at 150, which should easily take Apple down to fill the gap at 146 and possibly even to the 50 EMA at 145. So watch that gap fill on Apple. While it's below 150, it could be trying to fill the gap below. So in Apple, you're much better off waiting for the break back over 150 before getting bullish, and then we could start heading back up to retest the resistance at 156. On the financial sector, we were down 2.06% today. We closed right on top of the 50 EMA and outside the lower Bollinger Band, and we are starting to lose the bullish trend line. So this could mean the financials are trying to roll over and die. The industrials were down 2.29% today, breaking down below the support trend line and closing right on top of the 50 EMA of support at 100. The healthcare sector was down 1.3% today, closing right next to the support at 130 and still within this downtrending channel. The energy sector was down 0.5% today, continuing lower below the breakdown at 85.5, which means we could be trending lower towards 82.6 and then 80.5. So jumping back over to the S&P 500, we had the gap down open to start the week, which automatically puts the bears in the position to continue pushing lower, but do not rule out the bulls while we are sitting on top of very critical support levels. Wait for the price action to confirm that we're going lower with the clear break of critical support. And do keep in mind, when you follow price action, you need to analyze the price action each and every day, and you cannot stay bullish if price action is losing critical support. So you need to make sure you're following what the price action is telling you and not staying bullish while we're losing critical support. So if we continue to lose support levels and we can't bounce and maintain holding above support tomorrow, you need to instantly get a lot more risk off and expect lower prices. This is exactly what we do each and every day on the Stocks Channel Discord, and that is the only way you can remain an unbiased price action trader. If you want to come trade with the Stocks Channel Discord, you can find out how to join by clicking on the link below. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank or learn how to subscribe by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.